How you doing today, sir? Here. So what I wanted to do, and I think this is the most natural way for me to do it, is I've seen people have like home buying seminars, right? And I wanted to make one more virtual. So that way people can kind of just tune into it whenever they're ready to watch it, and they can answer some of their questions, and they can ask some of their questions and get answers to some of their questions. So the home buying process obviously is very, it's long and drawn out sometimes for some people, and that's why people avoid it. I think a lot of people associate buying a home with like buying a car, and you're from the car industry, right?
Right.
And is that a really slow process, or is it pretty fast?
It just really depends, in the situation of the search.
So some people like think it's kind of similar, right? So when people go buy a car, I'm sure you've seen in the past where people go in and they're like, "Hey, I want to buy a car," and y'all go and you find the car you want. But then when it comes to the financing, they go talk to the guys in the back, and they're like, "Oh, sorry, they're not ready yet," right? So it's kind of like, "Oh, dang." Right?
Sometimes it just depends. Sometimes the finance guys could drop the ball and scare the customer away
Oh, really?
with certain coverages they don't want or stuff they don't need,
Oh
but they make
yeah,
them feel
that
like they have to have
you
it.
got the gap insurance that does. So there's some of that in real estate too. So whenever anybody's looking to buy a house, there's always a lot of questions that come up, and that's why I always tell people if you're gonna buy a house, the first thing, the first step about buying that house is all informational. And what that means is exactly what it sounds like. Find out as much information as you can, not only about the house. I don't mean like go start doing inspections on some random house. I mean like you got to figure out where you stand. Like where are you in your life? Are you in a secure job? Are you working somewhere where you've been there for 2 years plus and everything's going good? I say 2 years plus because whenever you go talk to the bank, one of the requirements to give someone a home loan is to have at least 2 years in tax returns. So that's a big thing, 2 years, right? 2 years tax returns and at least 30 days at your current job. That's because whenever anybody, a bank, is giving you a loan, the underwriters, the people that pre-approve you, which is going to be the first thing on our list we're going to talk about, the people
Right.
that pre-approve you for a home loan, they want to make sure that one, you're stable, you're not like jumping around job to job to job to job. Two, you have income coming in, so that way, hey, I'm going to let you borrow, I don't know, a couple $100,000. You can pay me back, right? So that's why it's really important to know, where do you stand financially? Where do you stand credit-wise? Have you overextended yourself? Do you have too many credit cards out? Do you have too many open loans? Or do you have too many late payments? Are you really bad? Because people forget your credit score, all that is a report card on how good you are at paying people back. And so if you're really bad at paying people back, guess what I'm not going to do?
I'm not going to lend it.
I'm not going to loan you no money, right?
Right.
So pre-approval is the first thing anybody who's looking to buy a home should really start to consider. Now, for a lot of people, it scares them for different reasons. One, they know when they go talk to the lender, if they're not ready, they might tell them, hey, you're not ready yet. And people have it in their mind sometimes that when they go talk to a lender or a mortgage broker or a bank, that they're going to be like, no, what are you thinking? Get out of here. And it's not like that, whatever. It's
Right.
not like that whatsoever. People, when you go, they either get told, no, you're not ready yet, or yes, you are ready. Let's start shopping. Let's go over the numbers. Because even when you can get approved for a home loan, it doesn't mean that you're still ready, because maybe you don't have the down payment needed. Maybe you don't have just like the nerves yet. You're like, oh, I don't know, how much is it going to be? Let me save up a little bit more money so I have a little more cushion. I don't want to overextend myself. I also don't want to be house poor, which is the term we like to use. House poor means that people will go to a bank and they say, hey, you're approved for 300,000. So they start looking at houses that are 300,000 and they go to the top of their budget, not realizing that payment's going to be a little higher than maybe what they're used to at where they currently stay. So information, you start, you get pre-approved. You even just talk about getting pre-approved. You have to go to that door. And I'm going to show you the door. And I can show anybody who's looking to buy a house the door, but you got to walk in. Because there's a lot
Right.
of times someone will call me and say, hey, I want to buy a house. I've been renting too long. Cool, let's talk to the lender. So when you go talk to the lender's going to say, hey, this is what we need to do to see where you're at. And if you're not there yet, you're not there yet. But people sometimes, when they get to that point, it's like official, like, oh, they're going to really tell me, like, this is all kind of fun to talk about, but I didn't want to get too into it because I didn't want to get told no. You have to get over that fear of you're buying a home. You have to figure it out. It's like going to the doctor. You got to know how you stand. And there's only one way to know. You can guess. You can look at Credit Karma. You can kind of self-diagnose yourself like, no, I'm not ready yet. But really, in the eyes of a lender, the only ones I can tell you that is the lenders. So the first thing on my list, on my little Monopoly board, I got to show this to the camera. See this? So this is something we made a while back. That way people kind of have an idea. Now, it's simplified. It looks very, very easy. It's like click, 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 don't pass go, and you're there.
Right.
But there's also more involved. So let's just pretend someone goes, talks to the lender, everything's good, everything's great. So you're like, cool, we can get you pre-approved. Here's how much you're approved for. Here's how much your down payment would be. Anything you're looking to do, we can help you. You need to figure out if there's down payment assistance available. Maybe you've only saved up so much. No problem. We can get you down payment assistance if you qualify. Maybe you qualify for this type of loan, which is a VA loan. You know what a VA loan is?
No, I do not.
So a VA loan is only available to those that are active military or veterans. So when you go buy a home, there's only a couple different types of loans you can get. So unless you got cash, like actual cash, like Mayweather in a backpack, if you go to buy a home and you're getting money loaned to you, that money is either one through an FHA loan, which is your most common. It's one of the easier ones to get. It's 3.5% down, which is really nice. 3.5% down to whatever the purchase price is. Easy numbers. If a house is $200,000, put it in your head. 3.5% of $200,000 is $7,000. So some people right now are just going, wait, what? I gotta have $7,000 in the bank. It's like, well, if you want a $200,000 house, and then it goes up, play with the numbers, play with the percentages. Don't let that stop you. Like I said, this is a starting point to figure out, oh, damn, am I saving money right now? Am I in a point to where I can buy something, or do I need to focus on the saving money part? So that's where, again, people, when they talk to the lender, they take a pause, but they got to know that number. Because if you
Right.
don't know that number, if you don't know these things, you're kind of just going through life going, oh, it'll happen, it'll happen, it'll happen. But if you don't have a plan for it, how's it going to happen? You have to figure these things out.
Right.
So pre-approval is really important. Like I mentioned a second ago, the VA loan only available for active military or veterans, or if you know anybody or anybody in your household is active military or veteran, 0% down. So that other loan I mentioned, FHA, 3.5% down of whatever the purchase price is. With a VA, it's 0%. So $200,000 house, it's 0% down. Now there's still money involved to buy the house. It's not like they're just going to loan you the money, like zero money in your bank account. You still have to have funds and reserves and let them know you can afford it. But it is one of those benefits that active military and veterans have. So that's a VA loan. There's also conventional. There's a different type of loan. It's a private money lender. It's a credit union. Think of like Teachers Credit Union, Navy, Army. There's different people here locally that can help you. If you're looking for a mortgage broker, we have the mortgage brokers here that can help you and see if you qualify for, like I said, some of those programs, which are down payment assistance programs and other programs that are available provided by the state. They can help you and assist you with all those different things and offer you all of it all at once. And that's with the FHA loan, 3.5%, conventional 5%, VA 0%. So let's just pretend, hey, you came in, Core. We got you pre-approved. You're good. You got the money in the bank. You're ready to go, right? You want to go shop some houses?
Oh yeah, let's do
So
it.
that's the next part. Shopping for a home is I'm going to associate a lot of it to cars because I know a lot of people associate buying a house because it's a big purchase. Maybe
Right.
the only thing big they've ever purchased was like a big screen TV for Super Bowl, and then they went to buy a car, and
Right.
now it's like next on my list. I can't get the boat. My wife doesn't want to live in a boat. We got to go buy a house, and
Right.
so we're buying a house. Let's go start shopping. But how does it work though? Because you go online and I like go to Zillow, which is probably the most popular, right? I don't blame them. It's a really user-friendly interface. People can search in 3-bedroom, 2-bath, minimum budget. Well, I don't want to look at no shacks. Let's go like at 300,000 is the minimum, and then max million. Let's just look at everything. Let's look at everything in town, all the houses like these ones right here. Let's look at everything available,
Right.
no matter what the price tag is, because we're shopping. We're just shopping.
Right,
We're
right.
window shopping, and that's fine. But like I said, that's why going back to being pre-approved, knowing the numbers, you can kind of give yourself a window of like, hey, we can't go over 400, we can't go over 300, we can't go over whatever the number is that makes it comfortable.
Right.
Because what happens is, if you do start going over budget, it's like knowing you're gonna go buy a Mustang, but looking at the Ferraris and looking at the Lambos and looking at the Corvettes. It's like, you can look at them all you want, but don't be shocked when they find the price tag and someone tells you, oh yeah, the bank didn't say you can get that, you can get this. Same thing with houses. We got to look at something that's
Right.
going to be in a safe neighborhood. If it's a newer home, great. It's less to worry about. If it's a previously occupied home, not a problem. We're going to get inspections on it. If it's a new home, we'll let you know some of the incentives some of these different builders have around town. And so that way you know the differences between, hey, I want to buy a home, but I don't know if I want a new one. I don't know if I really like that style. But what are the benefits of buying a new home? The benefits is you get a new home. It's under home warranty. There's a lot of incentives. It's new. No one's ever used it, so there's nothing really to worry about. And it's going to be a really smart investment because anywhere you see new homes in town, the reason why those builders, the reason why those developers are building those areas is because they know the city's growing there. And over time, it's going to grow. It's going to grow. And so if you're looking for investment purposes, you're like, oh, I know I'm only going to be in this home for a couple of years. We got a lot of people here that are military. We got a lot of people here that are medical or just different reasons. They're like, no, I'm probably going to move out of town a couple of years. Maybe I don't want to buy. Well, think about it this way. Say you are going to be here for a couple more years. You can purchase the property. It's an investment property when you leave. I just had a text a while ago from someone that wants to rent out a house. This kid's 18. He bought this house in 2020. He's 20 now. He's killing it. He's like, hey, I'm going to move. I got a promotion at my job. How do I rent this out? He's doing it the smart way. He's like, I don't want to sell it. I'm going to hold on to it. So there's always options available if you're a first-time home buyer. If you're thinking, oh, well, what if something happens in the next couple of years? That's why it's really important when you're looking for the house, making sure, hey, what's your situation right now? Are you married? Do you have kids? Are you getting married? Are you gonna have a kid? Are you going the other direction? Are you going through a divorce? Are you moving out of your parents' house? Are you moving out of a bad relationship or whatever it is? We got to know so that way we can make sure we help you find the best option available in the current market that we're in. So finding a home is the next step. Getting pre-approved, finding a home, making sure it's a great deal, making sure it's within your budget, and also that it's not going to be something that if I sold you a house today, a year from now, you're like, damn, I got a really bad deal on this house, and I didn't do any inspections, and I didn't make a good offer on it, and I probably overpaid, and I didn't get the best deal possible. So that's step number 3, making an actual offer. I'll remind people, making an offer is free. And what I mean by that is there's a lot of different stop signs when you're buying a house. There's a lot of different points where it's like, hey, take a break. Let's renegotiate. Hey, this is what's going on. Let's renegotiate. And the reason why, again, it's a big purchase. It's a longer process. The actual process from writing the contract to moving into the house, it's about 30 to 45 days, all depending on appraisals, all depending on the lender, all depending on any little hiccups that could happen during that time. So if you're looking to buy a house and you go and get pre-approved, we're not counting that part. So that part might take a little while. Right. So maybe you're going to go and what happens? You go to the lender and you're like, no, like, you can't. What do you got to do? You got to work on credit, baby. You got to work on some things. You got to save some more money. You got to clear some things up, and they're going to help you with that. They're going to tell you these are the things you need to do. So right. Pre-approval. Let's find a home. Make an offer. Let's make sure we get the best deal possible. If we have to negotiate anything off the house, we can try to get closing costs. We will. Whatever you're looking for. Next, we make the offer. The buyer and seller go back and forth. We want to make sure everyone's getting a fair deal. Everyone's getting what they want. Then you go technically under contract. So what does that mean? People always say, oh, we're under contract. Oh, we're in escrow. All that means is that you as a buyer and me as a seller, or a buyer and a seller, have gone under contract. We're in agreement. You're purchasing my house for this much, and these are the details of the deal. The details of the deal are going to be, hey, what type of financing is it? When are we going to close? How long is it going to take? How many days for inspections do you want? That's a really important part that we're getting to next. How long is inspection? How much are you going to pay me for that inspection period? How much money are you going to put down as earnest money to make sure I know you're serious? Put a little skin in the game. How much? Right. All these details are within this contract that we help people with, so that way they know there's little safeguards. Hey, we're going to write you a contract. We're going to make you an offer. You're going to go into contract on this house, and we're going to go through all the steps to make sure, even after we make that initial deal and we negotiate, everything going forward after that is going to be in your best interest, because the whole point of all this is to make sure you get a good deal. I can't stress that enough. We're never going to just blindly hand you something over and go, hey, read the fine print. Good luck. It's never going to happen. Every single little thing you sign, every single little thing you do, it's all explained. Again, I don't want you to buy a house and a year from now just be really pissed off, because that's not going to help my business. That's not going to help you. Right. It's not going to help anybody down the line that might need our help, because I just half-assed it and said, hey, just do it. You can't do that. So you go into contract, right? Next, when you go into contract, there's a really important part called an option period. In different places, they call it different things. So it's called a contingency period, it's called an option period, or it's called an inspection period. Here in Texas, here in our market, we call it an option period. Why is it called an option period? Because you're buying a house, but you have the option to get out of that contract if you choose to, for any reason. But here's what it's really designed for. It's designed where if you're buying a house, and like I said, if it's a previously occupied home, someone's lived there before. Someone has lived their life in this house. Maybe they've taken care of it. Maybe they're one of those homeowners that never did anything, never changed the air filters, never considered that there could be something wrong with the foundation, never upgraded or got the electrical up to date. Maybe it was an older home that mom and dad owned. Maybe it was grandpa owned. It was passed down through family members. There's all these different things on a previously occupied home. Not that all previously occupied homes are bad or there's things wrong with them, but they all go through a normal cycle of life. Like, hey, the roof after so many years is going to go bad. After so many years, the foundation can start to shift because we have really weird soil here in Texas and in South Texas where it contracts and expands, contracts and expands. So there's all these little things that, even the seller might not know. We have people all the time. They live in a house and they go to sell it and they say, hey, well, I don't think there's anything wrong. Okay, cool. Here's a seller's disclosure. Buyer's going to look at a seller's disclosure. And if I know something's wrong with my house, I'm going to say, hey, look, this is what I know. Here's the reports I have. Or I don't know anything. I'm unsure if any of these problems occurred, or I don't know. I don't know anything. Y'all, good luck. And some sellers will put it like that. And so that's why, as a buyer's rep, that's what it's called whenever I'm helping someone buy a home, I'm making sure that if they're buying the home, we're going to try to find out as much as we can about it. The technical term is called due diligence. We're doing our due diligence to make sure that, hey, this house you're going to spend a whole lot of money in and you're going to build your life in. I want to make sure that it's in a good condition, you going into it, because if there's anything wrong with it, then we got to find out what's wrong with it, and can we get it repaired, or can we get a credit, or can we get a discount off the price?
Right.
So when you go and you buy a home, we're going to get you set up with teams of inspectors, and what these teams do is they do a general home inspection, which is a top to bottom inspection. That inspector goes in and literally from top to bottom, foundation, electrical, plumbing. If there's a pool, they can kind of check out a pool, or you can get a third party person. We check out the roof, we check out the attic, the garage, all the sinks, all the toilets, everything. If it flushes or if it plugs in, we want to make sure it flushes and we want to make sure it powers something you're plugging into. That's what a general home inspection does. There's also other inspections that you can do if you choose to. The ones we recommend is a general home inspection and a pest inspection. The reason for the pest inspection is because we want to make sure that it qualifies and has a clear wood report. That's really important when it comes to the type of financing you're using, because the money that people are lending you to borrow that house, to buy that house, the money they're letting you borrow, we got to make sure that they're getting a good return on their investment. They don't want you to buy something where it doesn't meet certain standards. So it has to meet certain standards. So the option period is your time to choose, if you want to opt out. And so that's a cost. That's something you pay the sellers. And so whenever you're buying a house, usually we'll try and negotiate about a $10 a day option period. So when the market was a little hotter last year and the year before and things were just going really, really fast, it was an incentive for a seller if a buyer said, hey, well, 7 days, $70, $100, 7 days. Right now, typically it's about $10 a day. 10 days is enough time for us as your realtor and as you as the buyer to do all the inspections we want to make sure we know what we're getting ourselves into. Right. But now, I'm not saying to do this. This is not recommended. But I always let people know, just to kind of take the fear away, the option period's there for any reason, not just because of inspections. If during the option period, maybe they just get cold feet, maybe another house pops on the market and it's the dream home they were waiting for and it came back on, whatever the reason. Maybe mom comes and sees it and she doesn't approve and you convinced her otherwise, but she's still like, no, mijo, you're not going to buy that house. Whatever it is, you pay for that option period. Now, does it suck as a seller for someone to say, hey, I'm backing out because my grandpa didn't like the house? Sure.
Right.
But as your option, you pay for it? Yes. Is it good etiquette? No. Does it happen? Yes. So the option period is to make sure, hey, I know what's up with this house. We did our inspections. We know what's going on. Here you go. So I'm the seller, right? Well, I'm the buyer. And I hand you over my list. Hey, seller, these are the things we want to get repaired. We would like a credit for, or we would like to be discounted off the price. As a seller, I take a look at it and I go, yeah, I kind of had an idea that was going on. I can take care of that. I got a guy for that. Do you have a contractor who can fix these things? That's what they're going to say. We want these things to be repaired. Unless it's small stuff, maybe we just want a credit, maybe more towards your closing cost. Those are all things that we can try to ask for too. So there's a negotiation when you make the offer, trying to get the deal. There's a negotiation during the option period once inspections are done to make sure that anything we found that no one knew about, we can try to see if we can get a discount, credit, or get it repaired. Getting it repaired is nice because you don't want to get into the house and those problems are still there. So say you took the credit, but you're like, oh, but I can't plug in my blow dryer. It's like, oh, we should have got that fixed. So we're going to make sure all this stuff is fixed. Also, making sure that any kind of things that pop up in the inspection report could be a lender required repair. Remember when I said, hey, the bank's only going to loan you this money if it meets certain standards?
Right.
We have a general idea. So the inspectors, like, hey, they're going to call the wood rot. They're going to call this peeling paint. They're going to call open exposed wires in the attic, all these little things. So those are the things for sure. Like, we got to get all that. We can't have any safety hazards. None of that when you move into this house.
Right.
Back to, I don't want you a year from now to be pissed because you're selling barbecue plates, because your house burned down, because you had body wiring. Got me? All right.
Got you.
Next. This is kind of like, I would say, like halftime. If this is breaking up into a basketball game, this is halftime. So third quarter is coming up, and that's going to be the appraisal. And this is why. So you're borrowing money to buy a house. The bank is making sure that the money I'm letting you borrow is worth it. So if you're buying a $200,000 house, that house better be worth $200,000. So that's why they send out a third-party appraiser. And what I mean by that is this is not someone that the seller picks. This is not someone that the bank picks, not someone that you as a buyer pick. This is just a third-party appraiser that goes out. They're just going out on behalf of the bank to make sure that the money they're lending out is worth what this house is worth.
Right.
So there's cases where someone might be buying a house for $200,000. They really love it. They were just quick to write an offer on it, and they got it under contract. However, maybe it was overpriced. Maybe they overpaid. Maybe, they were just willing to pay it. However, when the appraiser goes out, the appraiser says, well, this house is only worth $190,000. What happens then? So you have a house that's under contract for $200,000. You have an appraiser who says this house is now worth $190,000. So where does that difference go? And here's what usually happens. One, it'd be in a perfect world where a seller says, well, you wanted my house for $200,000, you got to pay the difference. You got to pay out of pocket $10,000. Most buyers don't have an extra just $10,000 sitting around
Right.
that they're willing to pay for a house that's only worth what? $190,000. It's
Yeah,
like, wait a minute, this
190,000.
house is $190,000. We had it overpriced. A lot of the times, people either try to meet in the middle. The seller will come to an agreement. Yeah, we kind of had an idea it wasn't going to appraise for that much. However, as your realtor and the one helping you buy a house, we'll help you in that situation by letting you know, hey, look, I believe this house is worth what we have it under contract for.
Right.
However, we're going to fight for you if it comes back lower to make sure we get you that lower price. I don't want you to have to overpay or have to come out of pocket to pay what we had it under contract for.
Correct.
So there's the making the offer. That's the first negotiation. Option period, asking for repairs or any kind of little credits. That's the second negotiation. Third negotiation is if it happens when an appraisal comes back low. So that's the appraisal process. That's how that works. How do I know so much about appraisals? I'm married to an appraiser. All right. So I know it sounds like a lot so far. So I'm going to take a pause because I need a drink of water. Any questions you have whatsoever about anything I just said right now, because you're my buyer right now. And for anybody watching, you're the buyer. What kind of questions do you think they might have or you have about this?
Of course, you mentioned the money down and whatnot. You pretty much already walked through the process in great detail. Pretty much covering
Into the mic, sir.
covering
Right there.
covering everything that I would ask. And you broke it down right before the break. And
Any surprises? Like any things you didn't know?
honestly, the whole entire thing. I mean, I didn't know because I never bought a house before.
Okay.
So this is definitely a learning curve for me. And
Does it seem so? A lot of people think like buying a house is scary. And I asked some questions the other day. I was like, hey, what are the most common questions? And I asked, why is it so scary to people? And a lot of the times it's because people don't go through this process every single day. That's the honest truth. Like,
Yep.
like would you be scared walking to a Stripes right now, walking to the gas station and buying water? No. How many
No.
bottles of water you buy your whole life, right? It's a simple
Right.
process. Boom,
Right.
here's my money, give me my water. But buying a house, one, isn't that easy, so people don't do it as often.
Right.
On average, it used to be between 3 to 5. Or, I'm sorry, it used to be between 5 to 7. Nowadays, between 3 to 5. I think the big reason why people are moving more is there's a lot more information out there. And it used to be, we come from a generation where our parents and our grandparents, they bought a house one time, and that was it. They didn't go through it again, mostly because they didn't know how to go through it again. There
Right.
was people buying and selling houses and making money and rolling all the profits into bigger homes. But for most, it was like, no, grandma bought a house, mom and dad bought a house, and that was it. They never considered moving. We got it. We got our house. We're going to be here forever. So I think that's what scares people a lot, too, is one, they've never done it before. Two, they might come from a family or a generation where the people behind them, their parents, their grandparents,
Right.
bought one house and lived in the house their whole lives. So they're thinking, well, dang, if this is my first house, I got to just nail it out the park. I got to just get my dream home right out the
Right.
gate, because if not, I don't want to live in this house forever. But that's where people don't understand their starter homes. Starter homes are properties that, they might not be your dream home, but it is a home that in the long run is going to put you in the best place financially. It's just going to be the smartest choice for where people stand now. A lot of people go into buying a home thinking like, hey, the money I make right now and the income I have right now and the life situation I have right now, be it relationships, kids, whatever it is, it's going to always be the same. And it's not. Like, life happens. And that's another part of real estate that we help people with too when life happens. And that's why we have to let them know, look, it's going to be scary off the bat. There's a lot of stuff you're not going to know. There's a lot of questions you're not going to know the answers to. There's going to be a lot of things that maybe you'll start grasping, and then you'll talk to someone at work or you'll talk to a family member or a friend, and they're going to ask you a question. And you're like, I don't know. I don't think I know that yet. And then they'll call us, and that's fine. That's what we're here for. I can't stress enough that we're here to answer questions. That's literally my job.
Right.
My job, as what I do within our team, is to answer questions, because we've been through this process so many times that we've seen all the good, but we've also seen all the what ifs and all the bads. And so what makes us good at our job is that we know what to do in the what ifs. Because what separates a realtor that's really, really good and a realtor that's really, really bad is that when it hits the fan, we know what to do. And a bad one doesn't. Like, I don't know. And when people don't know what to do, usually it costs a lot of time and money. So we
Right.
don't want that to happen to people. So processing. A lot of this stuff on my little board that I have here is going to be about processing. It's going to talk about all the lending, because our job as realtors, whenever we're helping people get it pre-approved, whenever we're helping them find the home, whenever we're making the offer, whenever we're helping inspections, this is all us. And then it kind of gets handed off back to the lender, because whenever you get past the option period and you go into the appraisal process and you go into the underwriting and you go into all the different things the lenders are doing, all the title work that's going to start happening, that's all things that the other team's doing, the lender's doing, the title companies are doing. Because before anybody does anything else, I want to make sure you're buying a good house. I want to make sure we're getting you a good deal.
Right.
After we do that, and kind of at the same time, it kind of overlaps, a title company where the contract between buyer and seller is sent, they're making sure that that property is getting transferred over to you correctly. There's no liens. There's no little hiccups on the title work, because if this is a piece of paper, this is your title, and I own this house, right? Like, here's my title to the house, my deed. Well, what if 10 years ago I got a new roof and I never paid the guy? He goes and he files a lien against my property for $10,000, saying, hey, Mr. Montalvo, this never happened, didn't pay me for this roof. I'm going to put a lien on his property for $10,000. And so he files that, right? And he files it, and it's a lien against my property. So that's what a title company does. There's all kinds of other things they can clear up too. This is just the most simple. It's called a mechanic lien. It means that, hey, I never got paid, so I let him know if he's ever going to sell that property, he's got to pay me first. So if he's going to get his money, I'm going to get mine too. A title company does all these things plus more, but really they're making sure that the ownership of that property transfers over correctly to you. That way, once you purchase it, there's no surprises. There's no ABC Roofing coming over. Is that a real company? I don't know. They're coming over. 1, 2, 3, 4, 5 Roofing. They're not coming over and saying, "Hey, you bought this new house. Guess what? You owe us $10,000. We had a lien on it." Because if it didn't go to the title company never saw it. You just did it in between individuals. That's kind of stuff that can come up. So title company is really important. That's where all the money is exchanged, because you're not just going to someone's house and be like, here's your check. No, no, no. It's all done through the title company. The paperwork, the lender, everything goes through the middleman, which is the title company. So that's really important. So they're doing their thing. While they're doing their thing, the lender is making sure, all right, so we got the contract, we know what they're paying for it, we go over the numbers, we're making sure underwriting, that's a department within a lender, is just double checking stuff. Hey, do you still have this job? Hey, do you still have this money in your bank account? Have you opened up new lines of credit? Are you going nuts buying appliances and furniture? Don't do that. Don't go open up new lines of credit before you buy a house. When you're getting approved, so let's go back to this board, when you're getting pre-approved, nothing can change, like just normal life stuff. What I mean by that is keep paying your phone bills, keep paying your regular credit cards, your grocery bills, your entertainment, whatever that is. Don't go and charge a credit card and book a cruise to Cancun for 8 days, and it's like, oh dang, you just opened up a whole $7,000. I don't know how much it costs. You just opened up a whole new line of credit. Like, what are you doing? You're buying a house. We can't trust you. So that's what underwriting is doing. Underwriting is making sure that from when you got pre-approved, from when you wrote the contract, when you went under contract, that nothing has changed with your financial situation. You didn't quit your job. You didn't get a pay cut. Nothing crazy happened with you. We're verifying all the information. Because once it gets past underwriting and once everything's good with title, you know what happens next? Yes. Without looking at the board.
You get back to the appraisal report.
We got the appraisal report. And so we're making sure everything's good.
Right.
Majority of the time, and lately, appraisals come back good. Cool. We're loaning out this money. Everything's good. The value's there. We're all good. The last little stuff you're going to go through that kind of mentions here, and I'm going to mention right here in this video because it's really important.
Right.
The last few things you're going to do is start getting ready to move into the house. Start getting set up with everything else you're going to need. And I'm talking about your home insurance. I'm talking about your internet. I'm talking about your phone. I'm talking about movers. I'm talking about packing. This is the stage. Third, fourth quarter of the deal. That's when you start moving. That's when you start boxing stuff up. Because from here, getting pre-approved all the way to the appraisal, anything can happen. Any little things can happen and the deal can go south. Do we want it to? No. That's why we do everything we can to make sure that this goes smoothly. There's no problems. And if there is problems, even if they're little ones, even if they're big ones, we can take care of it. So the last part of it is kind of like the finish line. It's kind of just like you're seeing it. You're like, hey, I'm going to get everything set up. The insurance is really important because the policy you pick determines how much your monthly payment is. Because on your monthly payment when you're buying a house, it's your principal, which is what the balance is on the loan. It's your interest, which is what you're paying to get the loan. It's your property taxes, which is depending on the property, depending on what county you're in, that can change. And it's your insurance. Your insurance, they need to make sure, hey, guy, we're giving you a lot of money to buy this house. You got insurance on it, right? Just in case something happens, fire, flood, tornado, hurricane, stuff like that. Yes, I got it. Cool. You have to have insurance. It
Right.
has to be on the loan. So when you go and shop for insurance, depending on what kind of policy you get, depending on who you go with and what kind of deal you get, that can fluctuate your monthly payment. So it's really important to shop around, get a good deal, and that way you can make sure you're saving as much as you possibly can on your monthly payment if you're trying to keep numbers within a certain number. After you get past that, you get the CTC. Maybe you've seen that online. Maybe you've seen realtors talk about it. You know what CTC is? Clear to close. That means we're doing it. You're buying a house. Paperwork is all done. Lender did what they needed to do. You did what they needed to do. Inspectors did what they needed to do. Appraisers did what they needed to do. Title company. Everyone did what they needed to do. And now we're going to the closing table. So you see those photos, and they're like, hey, they're holding the big key, or they're holding one of our signs, or they're holding a gift.
Right.
That's the closing table. Don't let that picture fool you. Think about all the stuff that just happened right before that. It's a process.
Oh, yeah.
And people will like to make it seem after they're done, oh, that was really, really easy. Because no one's going to be like, man, that was stressful. People just don't talk like that.
Right.
I talk like that because I want people to know going into it, hey, this is going to be new stuff, man. And it's going to be a little tricky at first, especially the very first time. But over time, and once you learn the process, it becomes very, very easy. I've actually had someone tell me, we had their third deal. It was the third sell and their third purchase. So it's like 6 deals with this one particular family. And on the third one, he's like, man, that just felt like buying a pack of gum. I was like, well, because you've been through this process a few times. You kind of know what to expect.
Yeah.
The first time around, it's like going on a brand new ride. It's like, I don't know which way it's going to take me.
Right.
But after a while, you start to get used to all the little surprises that could happen. And that's where we come in helping people. We answer all these questions. We answer and help with all the surprises. And we make people homeowners. When you get to the closing table, it's a very gratifying feeling because most people do a lot of work to get to the point. Maybe when they went to the lender right off the bat, they didn't tell them they were approved. They had to start a budget. They had to start kind of cutting things within their lifestyle. Like, hey, we can't go out to eat all the time. Or, hey, we can't take that trip we always take every single month to just go to San Antonio and go spend a few $100 and get a hotel and go eat and movies and all this Texas, whatever it is.
Right.
And so it's a happy moment, man, when people get to this point because they worked for it and they earned it. They really, really did earn it. And so once they get into it, after that, that's where we start the relationship of, hey, you're a homeowner now, and we'll be checking in with you. We're going to make sure that you're good. If you have any questions, we don't disappear. We don't change our phone number. We're not like an angry ex-girlfriend. We're not going to just be like, oh, phone disconnected. No, you give us a call, and we'll be here to answer your questions as time goes on. And hopefully one day we can help more of their friends, more of their family, or at one point actually sell the house. And that's part 2. So this is round 1. Round 2 is like, all right, I'm a first-time home buyer. I got that under my belt. Now I want to be a first-time home seller. How does that go? And that, my friend, is a whole other video. But I appreciate you listening
appreciate
in.
you.
I know I
Thank
just
you.
talked your ear off for like an hour.
No, man, that
Talk to
was-
whoever's listening.
that was
But
pretty-
this is good stuff,
the
and I
detail was
wanted
good.
people to hear a real conversation of how this works. And if there's anybody that has questions to kind of just pick apart any of these little sections or things that I talk about, that's what this video is for. Reach out to me, send me an email, call me, text me, Facebook me, whatever your choice of contact is. I know some people are like, nope, I only talk on Instagram or I only talk on this. Reach out, I will answer it, and we'll get you to the closing table.
Awesome. Thank you, Mr. Gino.
You got it, sir. Thank you, sir.
Sir.